Now, my video today is going to talk about interest rates, not only where we are with interest rates now in October 2022, but where we expect interest rates will go in 2023. Now, being in the real estate community, I've talked with a lot of builders, lenders, real estate agents, and title companies about what's happening in the market, and they're a little bit freaked out. A lot of people feel like we're headed for another 2008 market crash. I'm a little bit more optimistic about that, but needless to say, there's some weird things going on in the economy. So let's talk about what's happening there. Now, the first thing we want to talk about is what do interest rates tell us about the economy? Interest rates are kind of like a thermostat, right? When interest rates are high, that means that the economy is strong, right? When interest rates are low, that actually means we have a weak economy. And this is counterintuitive for most people. They think low interest rates are a good thing, and rightfully so. If I get a low rate on my mortgage, my car, my toys, life is better for me, right? But if you look at the economy as a whole, when interest rates are low, that's telling us that the economy is not doing very well. And so what drives interest rates? Well, the easiest way to explain this is it's kind of like a dog and its tail, right? Inflation drives interest rates. Everywhere inflation goes, interest rates will follow. So if inflation goes up, interest rates will too. When inflation goes down, interest rates will too. Okay, next question. Who drives inflation? These guys do, the Federal Reserve of the United States, right? Right now, it kind of feels like Lloyd's driving the car, but the reality is no. Our current Federal Reserve Chairman, Jerome Powell, is driving inflation and interest rates through monetary policy of the Fed funds rate. Now, if you listen to the news, if you listen to Chairman Powell, if you listen to the White House or the News Corps, or whoever you want to listen to right now online, most of them are telling us everything is just fine. We're not in a recession. Okay, so let's address this. Number one, not only are we headed for a recession, I believe we're already in a recession. Now, it's going to be a few more months before people start to admit this. It'll definitely be after the next election. But the reality is we are in a recession. So what happens to interest rates in recession? We'll talk about that today. But to do that, we first have to establish this certainty that we are headed for a recession, right? No use planning for the future if it's not going to happen. So let's talk about yield curves. If you go to a bank to buy a CD and you're going to give the bank your money for 5 years, you would expect they would give you a higher return on that money versus doing a 6-month CD. The reason being that if I'm going to give you money for longer, you better give me more money, right? That's how a normal yield curve works. But what happens when the economy gets a little bit wonky is that the yield curve on treasuries for the United States gets inverted. Meaning that I could go and buy a 2-year treasury from the United States right now, and I would actually get a higher yield than if I were to buy a 10-year treasury. And this is an important factor because this is a very telling indicator of where our economy is going. Look at this historical chart. This is tracking the inversion or the yield curve split between the 10-year and the 2-year since the 70s. Now, what you see here is that these white vertical lines, those indicate recessionary periods over the past 50 years. And if you look right before each of those white recessionary periods, what you see? A yield curve inversion, where the economy got wonky, the treasury yields got wonky, and you see that inversion happen. So every time, red inversion, recession, red inversion, recession. That's happened during preceding every single recession all the way till today. Now you'll see on the far right there's no white line, right? Again, we're not in a recession right now. The argument that most people are using right now saying that we're not in a recession is they say unemployment is amazing. You can walk down the street and say hello and get a job. All right, maybe that's true, but let's look at that historical data to make sure that their argument is sound. Historically, guess what happens to unemployment right before a recession? It bottoms out. Again, here is a historical chart going all the way back to 1950, and just before every single recession, what happens with unemployment? It hits its lowest point of the cycle, right? People associate recessions with unemployment, but the reality is we don't hit high unemployment until the end of the recession. The beginning of the recession is always low unemployment. So you see a smile on my face, and you're wondering, well, oh man, we're headed for a recession, and this guy's happy about it. Let me explain why I'm happy about this. The reality is because, real estate right now is struggling because of high interest rates. But what do recessions always bring? low interest rates. As I've mentioned before, when the economy gets weak, interest rates go low. And this will support our economy and this will stabilize our housing industry, which right now is taking a major hit because of these high rates. Historically, this is what happens. We hit a recession, interest rates fall. That happened in 1980, 1982, 1990, the early 2000s, 2008, 2020. Now, every time we enter a recession, interest rates will fall to strengthen the economy and get it going again. And so, yes, 2022 has been the year of high interest rates. 2023 will see the reversal of that. We will peak out on inflation over the next couple of months, hopefully by the early January 2023. By then, inflation will come back down. Interest rates will come right back with it, as you know, just like a tail of a dog. And by this time next year, we'll be seeing a much different economy than we're seeing this year. So I hope this information is helpful for you as you're predicting the future and looking to make plans on your real estate expectations and your real estate transactions or purchases. Hopefully this information helps you to make a better and sound decision. If you have any questions about any of this, mortgages in general, especially reverse mortgages, which is what we specialize in, please give us a call, shoot me an email, or let me know how I can help you. Thanks for watching and have a good one.